Alphabet just posted the biggest earnings beat in its history and the stock is down 4%, and that's not even the craziest thing that happened today. Meanwhile, a semiconductor company nobody was watching just exploded 31% after hours on a single contract announcement. Buckle up, because this earnings season just went completely off the rails. Let's break down everything you need to know. #1. Today's key earnings reports, winners and losers. Microsoft, MSFT, the undisputed champion of the evening. Revenue came in at $67.8 billion versus the $65.1 billion consensus, a 4.1% beat driven almost entirely by Azure, which grew 38% year-over-year. EPS of $3.46 crushed estimates of $3.22. CEO Satya Nadella highlighted unprecedented enterprise AI adoption on the call. Stock is up plus 6.2% after hours, pushing toward the $505 level. Visa, V, a quiet monster quarter. Revenue of $9.7 billion beat estimates by roughly $200 million on surging cross-border transaction volumes. EPS of $2.63 versus $2.51 expected. Management raised full-year guidance for the second consecutive quarter. Stock gained plus 3.8% in extended trading. Lattice Semiconductor, LSCC, the sleeper of the night. Revenue of $682 million destroyed consensus of $591 million after the company disclosed a massive multi-year FPGA supply contract with a top 3 hyperscaler. Stock erupted plus 31.4% after hours on roughly 18x average volume. Alphabet, GOOGL, here's where it gets bizarre. Revenue of $96.2 billion beat estimates of $93.8 billion. EPS of $2.18 topped the $2.04 consensus. By every traditional metric, this was a strong quarter. But the stock dropped minus 4.1% after hours because cloud revenue of $12.9 billion missed the whisper number of $13.6 billion, and CFO Anat Ashkenazi disclosed a $4 billion restructuring charge tied to AI infrastructure consolidation. The market is punishing the miss within the beat. Chipotle Mexican Grill, CMG, same-store sales grew just 1.2% versus expectations of 4.8%. Management blamed consumer softness in the $75,000 to $125,000 household income bracket, which is a terrifying phrase for the broader consumer economy. EPS of 28 cents missed the 33 cents estimate. Stock cratered minus 11.7% after hours. Snap Incorporated, Snap, revenue of $1.36 billion missed the $1.42 billion estimate as brand advertising pulled back sharply. Daily active users actually grew 9%, but average revenue per user declined for the second straight quarter. Stock dropped minus 8.3%, dragging the digital advertising complex lower. The after-hours session is telling a bifurcated story. Nasdaq 100 futures are essentially flat, down just 0.1%, because the Microsoft surge is almost perfectly offsetting the Alphabet weakness. The S&P 500 futures are down 0.3%, weighed by Chipotle dragging the consumer discretionary sector. The AI infrastructure trade is alive and well. Microsoft's Azure numbers are pulling Arista Networks, ANET, up plus 2.1% and Vertiv Holdings, VRT, up plus 1.8% in Sympathy. But Alphabet's cloud miss is creating confusion. MongoDB, MDB, is down minus 1.4% and Snowflake, Snow, is down minus 1.9% as traders question cloud spending trajectory. Chipotle's consumer weakness commentary is rippling through restaurants. Sweet Green, SG, is down minus 4.2%, Kava Group, Kava, is off minus 3.6%, and even McDonald's, MCD, is slipping minus 0.9%. When the fast casual consumer flinches, everyone feels it. This earnings season is colliding with an increasingly complicated macro backdrop. The 10-year Treasury yield closed at 4.58%, up 6 basis points on the day, after this morning's preliminary Q1 GDP print came in at 2.4% annualized, hotter than the 2% consensus, suggesting the economy still has more momentum than the Fed wants. Core PCE for March, released Friday morning, printed at 2.9% year-over-year, unchanged from February and stubbornly above the Fed's 2% target. Fed funds futures now price only 125 basis point cut for all of 2026, down from 3 cuts priced in January. Chair Jerome Powell's Jackson Hole framework of patient recalibration continues to define policy, and the May 6 FOMC meeting is now expected to be a firm hold at 4.50 to 4.75%. The US dollar index, DXY, is at 105.8, its highest level since November, creating headwinds for multinational earnings, something to watch as more S&P 500 companies report next week. 1. Microsoft, $505 after hours. If it holds above the $500 psychological level at Monday's open, momentum traders will target $520. The Azure acceleration is a genuine fundamental re-rating catalyst. 2. Google, $168 after hours. Watch the $165 support level. If selling accelerates Monday, this becomes a potential buy-the-dip candidate given the underlying revenue strength. The restructuring charge is a one-time item the market may forgive within 48 hours. 3. LSCC, $78 after hours, insane move, but the contract details are real. The gap fill level is around $64. If it holds above $70 on Monday, this could have legs toward $85 to $90 as analysts scramble to revise models. 4. CMG, $48 after hours, this is broken near term. The consumer spending commentary will keep a ceiling on this stock until the next same-store sales print. Short-term resistance now at $52, the pre-earnings close. 5. ANET, $98 after hours, riding the Microsoft AI capex wave. Reports earnings May 5. If Azure's strength signals sustained networking demand, Arista could gap higher on its own report. Key level, $102 breakout. Biggest surprise beat, Lattice Semiconductor. Nobody, and I mean nobody, had this on their radar. The hyperscaler FPGA contract came out of nowhere. 3 sell-side analysts had underperformed ratings on this stock entering the print. That's career-altering for those analysts. Most crushing miss, Chipotle. An 11.7% after-hours decline for a company that was a consumer staples darling. CEO Brian Nichols quote on the call, "We're seeing real-time trade-down behavior we haven't witnessed since 2022, sent a chill through the entire restaurant sector."